Hey everyone, I'm Jambara the Realtor, and welcome to my channel where I discuss all things real estate. Today, I'm breaking down the home buying and selling process in one video. The financial side, the paperwork side, and everything in between. Whether you're just curious, actively planning your next move, or trying to understand how this whole thing works, this video is for you. Let's get into it. Let's start with buyers, because this is where I see the most confusion happen. Before you do anything, and I mean anything, you need to get pre-approved, not pre-qualified, pre-approved. Here's the difference. Pre-qualification is basically a quick conversation with a lender based on what you tell them. Pre-approval means they've actually verified your credit, your income, and your assets. That's the one that carries weight when you submit an offer. In today's market, sellers want to know you're serious. A pre-approval letter is how you show that. When a lender evaluates you, they're really looking at three things. I call it the CIA framework. C, credit. Your score affects your interest rate and what loan programs you qualify for. I, income. Lenders want to see stable, consistent income, whether you're a W-2 employee or self-employed. A, assets. This is your down payment, closing costs, and any reserve. And here's an important tip. If you have cash at home, get it into a bank account as soon as possible. Lenders need to see your funds documented and in an account. The earlier, the better. One of the biggest myths in real estate is that you need 20% down. You don't. There are several programs available depending on your situation. Conventional loans can go as low as 3 to 5%. FHA loans require 3.5%. VA loans for veterans and active duty military may require no down payment at all. USDA loans are another zero down option for eligible rural areas. Every situation is different. So the best thing you can do is sit down with a lender and find out which program fits you best. Here's something that catches a lot of buyers off guard: closing costs. On top of your down payment, there are additional fees due at closing. Things like lender fees, title charges, appraisal, and prepaid expenses like homeowners insurance and property taxes. The good news is that closing costs can sometimes be negotiated into your offer. For example, asking the seller to contribute toward them. Your agent will walk you through what's realistic based on the market you're buying in. Before you start touring homes, there's some paperwork involved. This includes any agency disclosure, which explains the different types of representation available to you, and a buyer representation agreement or contract, which officially establishes your working relationship with your agent. These documents exist to protect you and make sure everyone is on the same page before the process begins. A good agent will walk you through every page so you understand exactly what you're signing. Once you find the right home, your agent will help you write an offer. After it's accepted, you will enter the inspection period, where a licensed inspector evaluates the condition of the home. If issues come up, repair requests are handled through what's called an amendment to the purchase agreement. This is how buyers and sellers negotiate repairs or credits after an inspection. The goal is to always make sure you know what you're getting into before you get to closing. Now, let's talk about the seller side, because this is a completely different process with its own set of decisions. The most important decision a seller makes is the listing price. And here's a simple way to think about the market's response when a home goes live. Low or no showings usually signals the price is too high. Showings but no offers means you're getting closer but not quite there. An offer means the market responded well to the price. The goal is to price based on data, comparable sales in your area, current inventory, and market conditions. Overpricing can actually cost you money in the long run because homes that sit too long lose momentum. When a seller is ready to list, they sign a listing agreement or contract, typically an exclusive right to sell contract. This authorizes your agent to market the property, put it on the MLS, coordinate showings, and represent you through the entire process. Like any contract, you should understand every line before you sign. A good agent will walk you through it. Before accepting any offer, sellers should understand their net proceeds, meaning what they actually walk away with after everything is paid. A seller net sheet breaks this down. It accounts for things like your remaining mortgage balance, real estate commissions, closing costs, prorations, and any concessions agreed to in the offer. Understanding your net before you accept an offer helps you make a confident, informed decision, not an emotional one. When offers come in, the highest number isn't always the best offer. There are several factors to consider. The buyer's financing. Are they pre-approved, and how strong is their loan? Contingencies. What conditions does the buyer have? Timeline. Does the closing date work for your situation? Concessions. Is the buyer asking for closing cost help? All of these affect your actual outcome. Your agent's job is to help you evaluate the full picture. And that's the overview. Buying and selling, start to finish. Real estate can feel overwhelming, but when you understand the process, it becomes a whole lot less stressful. That's exactly why I make content like this, to help you feel educated and prepared before you ever make a move. If this helped you, drop a like, leave a comment, and subscribe. And if you have questions, drop them below. I'm Jambara the Realtor, and I help Minnesota buyers and sellers make their move. Let's make your next move your best move. Thank you for watching and have a blessed day. See you in the next one.